The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more into the breach do we go, dear friends. As always, we'd like to come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
S&P up 13.5 points at 23.29. Volume is a little tepid at just a little over 2 billion shares on the New York Consolidated Tape as we start the day. And what else is happening out here? Well, up on lighter volume. The advanced decline line probably not as strong as it should be. Last time I looked, I haven't looked in the last 30 minutes or so, but I think it was about 1,500 to 1,200. So just a little bit on that side, and you can probably thank Apple for most of that. It's still a little over 11% of the NASDAQ 100, and a big part of the S&P, and of course a big part of the Dow. And all the other stuff out there that makes one little stock kind of the tail wagging the dog. But we'll talk about this, and we've got a lot of charts to look at today yet. A little bit a follow-on from Friday's show. And as always, we like to start off the show with a little bit of history.
That it's all just a little history repeating.
It is history repeating. On this day in 1990, junk bond giant Drexel Burnham Lambert seeks bankruptcy protection only days after chief executive Fred Joseph had told the Wall Street Journal, "I see daylight. The worst is behind us." A lot of people really don't understand that I'm not just making stuff up. When in the den, a lot of people talk about the serial crime spree that is the financial markets here in the United States. And I say, go after them with the RICO Act. The reason why is that this company went bankrupt mostly because Rudolph Giuliani actually did pressure them with a RICO suit. And they didn't think that they could go through with it. And all he had to really do is basically threaten it to bankrupt the company and let enough people know that it was coming. He didn't even have to do it. I think a similar tact would be for serial infringers of the law in finance to do so. But he came up with a theory that's called respondent superior, i.e. the people that are below are responsible for what the people do above. And I don't know if it could have ever gone to the end, but probably would have wrapped up 2, 3, 4 years of these folks fighting it in court, basically airing the dirty laundry. And at that point, you would have had a lot of people, maybe a few, turning on others. And, because you're really talking, I think the minimum jail sentence at that time was about 10 years on any of those RICO claims. And I think they probably could have got it at least one. So these guys would have been looking at significant jail time. Meanwhile, Michael Milk, and I think was already in jail and was going to get out before Christmas of 1992, if I remember right. Michael literally knew everybody and had everybody going after the then new or soon-to-be president, get him out, and the old president, and a bunch of other people. Literally, the guy had a phone book as big as the New York one, with everybody he could go after. And all those sentenced to 10 years ended up doing a little less than 2 when he got out. But even that he didn't do a great deal of time, certainly put the kibosh, at least for a few years, on everybody doing something that way. But I think a few more of these RICO cases where the actual superiors then needs to be or is responsible for the employees that, quote, quote, don't know what they're doing, would probably do a great deal of good in ensuring what is, for the most part, a trust business in finance in the United States. On this day in 1990, they go belly up. And just on the threat of RICO corruption charges, I think that we could do the same in the near future. It would be a good idea. It was good for Rudy Giuliani, and I think it would be good for the rest of us. Went to a little deal Saturday night, or Saturday evening, I guess. I wouldn't call it Saturday night. And it was on statistics, and I found it very interesting. It was an argument, and this argument was based on two things. One, whether or not the Pats should have won the Super Bowl, and not based on some kind of mojo switching over, but literally reversion to the mean. The gentleman that was doing this, PhD in statistics, showed that for the most part, across almost all sports, that the reality is much more of reversion to the mean than getting your mojo back, or, rapid adjustments to maybe somebody else's defense or offense. And I found it very interesting because he basically paralleled it with the stock market itself, where low volatility divided by momentum equals low risk, actually is high risk. And of course, high volatility and value and divided by value is actually a high risk. So everybody kind of has, like right now, they don't think a lot of reversion to the mean. That's exactly when you should be thinking about reversion to the mean. Just thought it was very interesting out there, especially the idea that somehow everybody wanted to say that the other team lost in the last two quarters. And his theme was, backed up by a lot of data, that the Pats score a certain amount of points in every game. Sometimes it's early in the game, sometimes it's late in the game, but over 16 years of data, it's pretty consistent. It doesn't matter whether they came in the first quarter or the last quarter. It only matters that they came before the end of the game, and it happens very, very often for one team, even if it comes lopsided at the beginning or end. Just thought it was very interesting out there. What else is going on? Not a whole lot of news. We're going to get into charts out here. Bring them up here. And I wanted to get into some of the movers. In fact, let's just get my list for a second. Let's go into Haynes when we come back. And pretty much the biggest loser out here today, off 10% through the previous low of $34.12 with 10 million shares compared to 2.3 million shares on November 14th. Kind of tells you a lot, doesn't it? We'll be back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hey, we're back. Haynes Celestial Group, we were looking at this one out here. I just wanted to take it. They got a SEC subpoena. And it doesn't look like they're going to file their quarterly report. And a lot of accounting issues out there. But we'll talk more about that maybe tomorrow. Maybe I'll have a chance to look at it. But, wow. Pretty wicked out here, and certainly does not look good on the chart basis. What else do we have out here? NVIDIA, we talked about this a little bit, and my theory on that, which is, get this out here correctly, NVDA. And, nice, very light volume top out here, blew off the December 28th high with 57 million shares, got into it with 18.6 million shares on February's. It's kind of been going sideways on earning, came down. Got hiccups on some decent volume of 41 million shares today, still down, and one of the bigger movers out here, down 4% on the day, with T-Mobile off. Take a look at that real quick. TMUS. They're going to give some kind of unlimited data, and the market's thinking maybe they're giving away the store out here. I haven't had a chance to actually look through the plan, but down with some decent volume out here. And if you look at the overall pattern out here, this is one that looks like would be a major break back down to about the $55 level, which is the candle of January 10th. Looks like that's kind of going to be the bottom of support out here. So you do have some downside in this possibly from the charts. And we'll go to some other ones out here. We'll go to the UNG, other ones that gap down. Kind of interesting with all the snow out there to see UNG gapping down today, but it certainly did so. As we said, this is kind of where I've been looking for this thing to come back in and possibly form a base, but that would be another 17 cents lower down here. And you do have the possibility of a second gap all the way down to $6.70. Now, without an extended winter, that does look tough. And maybe $6.60, $6.70, somewhere in there looks like a good possibility. You do have to like one thing, and I will talk about this as a issue for maybe next fall or even midsummer as you get into it. This is not a bad-looking chart, or as bad as everybody else thought. You got some volume up at 952. And the energy off this top, although you had a nice big day, has not been all that exciting, at least so far. You've had some decent gaps. Volume today, not all that exciting. But, if you could hover around here and base out the $6 and $7 bottom throughout the summer, this next fall might be an extremely good look at natural gas, at least on this chart. And again, I'm looking at about, what am I going to say? About two-thirds of the energy on the way down from the November 9th to December 9th high move compared to the December 28th down to the December 13th move so far. Now, maybe volume picks up in the next few days or something, but that $6.85 low out here may be a low for a very long-term play in natural gas. I don't know about the ETF, but might be very interesting back down here if this thing can wash all the way back out and find some kind of level around that $6.85, $7.25 area that looks like some level of support, especially if we're going to be doing all this industrial stuff that a lot of people think we're going to do. Let's see what we have for the gap up. Caterpillar, nice gap up, just up to the previous high. Take a quick look at that. But volume is light. That's why I'm not getting too excited here so far today on the movement, and why I talked about the advanced decline line. You would think that, man, if we were going much higher, that we'd be pulling as a team, and 3/4 of the stocks would be higher. And it's a little better than half, but not all that exciting. $99.46 in Caterpillar, the last time up here, 9 million shares. We got within 40 cents or 42 cents of that today already, but the volume is about half. So keep an eye on Caterpillar. It's really unclear why this thing has run as much as it has compared to some of the other stocks that probably should have done better than that. The Chemours, symbol is CC, nice gap up. Would have liked to see maybe a pretty decent volume so far. Just to take a little longer look at this thing. But looks to me like you could see this as maybe an exhaustion move in this, and it could come back to the $27 level. FireEye had a nice gap up. Looked like it was fading this out, but it's just kind of filling about halfway gap back into this gap down that occurred on earnings with huge volume. You need the $10.60 low of February 3rd to be tested on lighter volume, which probably won't be tough if it can get back into the mid $10 level. This may be finally something you can buy. I've bought it, but not carried it through earnings a couple of times. Made a little money to the upside, but keep thinking that there's going to be a big move in those security companies one day. In biotech, that kind of gapped up, but not much. Not a lot of movement out here. Macy's a little bit on some rather dubious ideas on how much that stock is worth. I didn't do much. Melcro Entertainment, MPEL, nice little gap on that, but no volume again on that. Seeing a lot of divergence between the indexes and the ETFs, and then the volume of the stocks underlying those is extremely light on many of these stocks. Archer Metal, the metal company MT, finally back up to this gap on the way back down that goes back to the, August 12th of 2015. Now this one, when you're talking about three gap plays, go back to this one here. If you're looking at about three gap plays, might have and might be exactly what you're looking at here, with the first one at $5, the second one at $6.50, and this other one I'm kind of discounting because it's just a gap back up against this drive. But here is the gap, and then you're up against the second gap in these, and I wouldn't be shorting a $9 stock, but this is looks like a lot of maybe the last gasp before a decent pullback, and wouldn't be surprised in those steel companies if you get that. Nucor up, but I don't know if you can make a great deal out of it. Certainly not a lot of volume, but does look like this thing could get back up to the $68. I don't see anything on that actually tells me lower. When we come back, we've got a bevy of stocks to look at. You can always give me a call at 877-927-6648. You can email me at path@tfnn.com. And, of course, you can always post a message in the den.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're back. Nucor had a nice gap up today. No volume, though, and right up to 682 retracement. 6.18. I'll remember it eventually. Back up there today, which was 63.49. Got to 63.97. But again, volume a little tepid out here now, back into some upside resistance on the left hand of the chart. Of one of the bigger poppers out here today is in semiconductors, on semiconductors. Now, this is a nice little pop out here. What you do want to watch out for is a gap down tomorrow and an abandoned baby on that high. I don't think there's anything else you can say until tomorrow on that. Qualcomm, which has been beaten like a redheaded stepchild, like a seal out on the ice floes of the Arctic. A little pop up here. Again, no volume, and of course, lots of legal lawsuits and people from the United States to China. Everybody's suing them. Probably doesn't sound like a great place to work, because all you're going to do is be going to court for a while. Rio Tinto, a couple of these companies had some nice gaps up. Now, this one does break the previous highs of the 25th and 24th of January with some nice juice. You had about 5.2 million shares on those days. You got 8.7 million shares on those on that. And of course, if you go back through and even look at a longer one, you're right back up here to some kind of long-term resistance levels. They're going to take you back to this gap. The gap occurred on the 28th of August, 2014. That is about 48 bucks. So, you got about another buck higher into that, buck and a half higher into that gap. And it'll be interesting to see how that reacts to that. But even in here, you probably have a ton of those people, if they held the stock for 2 years, that are dying to get out of it. So probably going to be a little bit of resistance levels in that. Steel Dynamics, another one of these stocks that popped fairly nicely in the materials sectors. Nice pop out here, but just no juice, which is the problem out here. So you have to keep an eye on that. And of course, as we speak right now, I don't know if you can make a great deal of it, but the Prime Minister of Canada is speaking with the president now, and a lot about tearing up NAFTA and that kind of stuff. But there are actually two separate agreements for those people that do not know, that go back into the 80s, that would take and still be around for our trading partner to the north. So probably a little bit less of an issue for that. Anyway, Steel Dynamics, nice little pop up. Teva Pharmaceuticals, a little bit off the bottom out here, which makes me think that there may be some level that Teva might find as a base around 32. Still needs a little bit more time to go out there. Let's take a quick look at the TLT. TLT is at 120.35. Had kind of a little separate move out here. Let's get a little closer. Had kind of a little separate move back up, and kind of a failure. Of course, that goes along with the dollar, I suspect, which is printing $100.93. Got to 101, got a little over, got to 101.10, and sold off a little bit here. A lot of shorts really pounding on the dollar here, but I'm a strong dollar fanatic. It'll be hard to get me off of that. We kind of see these little waves of short covering in the dollar. My guess is that if this moves up past this 101, we're probably going to have a very large short covering rally that could take us back up into the 102 area on the dollar. So be very careful. If anything you trade has to do with the dollar, I guess that's probably equates out to also what gold is doing at 122.70.80, down about $8 today. Talking about steel, United States Steel breaks above the previous high of December 8th of $39.14 with 27 million shares, with 20 million shares so far. So let's take a look at this and see if there's anything else or how far back we have to go There's a high at 41 million shares going back to October 29th of 2014 and $45 September 7th of 2014 with 21 million shares. So you're kind of close with volume in that. The biggest problem you have is this volume spike previously, and it's just going to be about kind of the same. So it might have a lot baked into the steals already. And let's see, what else do we have? Take a look at that. Percentage advancers. Did we already go through this? No, we didn't. Take a look at the percentage of advancers. Applied optoelectronics, nice little bounce above this rail that's been going on since the 12th of January and going until Friday's close. Volume picked up a little bit on Friday's close, but not enough. And even today, volume not all that exciting, about 850,000 shares compared to the sign of strength back on the 12th of January that had 4.4 million shares. So let's take a little longer look at this. This looks to me like a very light volume move back higher. The Chemours company, nice gap up on this one. Some fairly decent volume and a nice move back. You know, this is another one of these stocks that just came off the bottom and only had really one pullback. This looks like it could be finishing that ABC on the way up. Cliffs Naturals, another one of the companies that had a nice gap up. Energy fairly decent on this. Unfortunately, it's given back about half of the pop. CMRE, which is Costamare, nice pop, a little bit more volume, but nowhere above the resistance levels on that. Control Company, CRTL. Oh, I love that name for the company. Back up and finally filling all this gap up that goes back to, what is this, the February 6th of 2015, where you had two gaps down. This gap happened on 1.6 million shares. Only have about 857,000 shares so far back up into this gap today. You did have 2.2 million shares, though, on Friday as it entered that gap. So kind of a hard one to call, but my guess is there's a lot, it still is a lot of overhead resistance in it. Not a stock that's been about a lot, which is kind of nice on Mobileye. Nice pop on it with some decent volume back into a double gap that goes back to the, September 12th with 7 million shares. It's got about 8.55 million shares. So, well, it looks kind of interesting out here. I think that may be the move off the bottom on it. We'll get back to Twilio and Vail and a few others coming up a little higher. Look at the volumes on them. Give me a call at 877-927-6648. Email me at path@tfnn.com or put a message in the den.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And the S&P's up 12 points, volume about 2.25 billion shares as we get into the C block, I think is what it is. There's the D block. I never can remember. It's the D block. Anyway, what do we have going on here with Twilio? This is now going back up into the previous high of December 22nd that had 11.6 million shares. We got about 6 million shares so far today. So looks like that's going to get back up into that high with lighter volume. Vale, V-A-L-E. So we talked about this, nice pop, some decent volume. Let's go to the percent decliners. We already do those? No, we didn't. ARA, which is Cara Therapeutics. Nice 2-day move down with some decent volume on this. Looks like it would come back into the $9.50 and maybe $11 range, somewhere in there. You might find some support. The last real sign of strength is where we're at today on the close at $12.20. So you got maybe another $1 down before you actually get back into the last real day of strength. You had one up here on the high, but again, we're getting a lot of these stocks that are having blow-off highs. In this case, it was the 1st of February. CYNO, which is Sino-Seizure, and this one, let's take a quick look at this. Gap down, some fairly decent volume. Looks like it's going to come back to the $45 level. I don't know if there's anything else you can say about it other than that. FMI, Fountain Medicine, it's kind of a bouncers. We talked about Haynes Celestial breaking out the bottom. We'll go to a little longer time frame on this. But back 4 years, probably going to bust out all of that. The next big low is $26.21 from February 26th of 2013. So, you got a lot of downsides still possible on that as long as the legal stuff is hanging over them. INVO, Innovation Holdings, gap down with not all that much volume. You do have a high volume low out here at the December 14th, 2016 low at $8.60. So again, a lot of these are just bouncing back up, filling about half the gap sometimes, and then rolling back over. But the safe place to buy this, if you would want to, would be back at that December 14th low at $8.60 on a nice test. Let's say 3 million shares on that. LXRX, which is Lexon Pharmaceuticals. A little pullback here, light volume. Don't see much out there on it. Ubiquiti Networks, second down day in a row. for this after poor earnings. We've been looking at this thing to come back about $46 before it's all over. Let's take a look at some of these other ones that I have on my list of things to look at. There they are. And there they are. XLV, which is the healthcare sector, on the shorter term basis, has been banging around the $71 level. It's above it today with very light volume. You got about 3.2 million shares compared to 10 million shares on January 10th. And November 10th, you had 28.3 million shares. So this one's really got a nice little pendant formation setting up in the healthcare sector, especially today with almost a little less than 3.2 million shares. Now you had this thing kind of go up with bigger volume, but there's just not much out here in this healthcare sector, at least in this ETF. I would be very careful of that. In the housing sector, I wanted to see, well, this isn't the housing sector. This is a mixed industrial test equipment, if I'm not mistaken, Waters Corporation, WAT. Double gap, it's right into it today. Very light volume with 407,000 shares compared to the last spike at 2.88 million shares, compared to the gap down of October 25th with 3.2 million shares. So pretty good signal out here that Waters Corporation is in this gap, and it will reverse fairly quickly. SPLK, Splunk, has been battling this gap down that goes back to August 26th, 10.8 million shares. Came into it with 1.8 million shares on November 18th. Tried again with 7.6 million shares on November 30th. Both of those were rebuffed violently. We're back up the last 3 days, 1.7 million shares, 1.2 million shares. Down today on 850,000 shares, but just going against that gap down from about $65 to what was that? About $61.50 back on August 26th of last year. So I don't know. This is a data mining company, and it's unclear what their business is. I've tried to look at this thing before to get an edge on it, but they are not very transparent on what's going on and what their customers are doing with their products and how much they're selling. Very tough to see how that goes, and not an IPO that hadn't been out that long. SBA Communications. What else do we have? A nice double gap that goes back to the 8th of November and the 2nd of November, coming back into these double gap downs. And, the volume on those days, at least the first one, pretty huge. It was 3.5 million shares. Got into it with 782,000 shares on January 18th, and just 583,000 shares now. So a few of these companies really kind of showing off some at least short-term weakness. I don't know if this thing can actually get a little bit more, but volume is fairly weak into this big downdraft, and all the volume pretty much on the wrong side of history. RF, which is Regions Financial, little bank, regional bank. Nice little pop above the January 13th high that had 26 million shares with 7 million shares today, so fairly light on that one. I didn't see that many more in the financial sector that really made me think anything was going on. Let's see if this one's... Just going back, Quality Systems, QSII, just going back into some huge down days. I don't know if there's anything you can make about that one. Triple Top and Pioneer Natural Resources, PXD is the symbol. Now, what you wanted to be seeing is something in the neighborhood of, I don't know, more volume than the last time. January 12th, you had 6.5 million shares into about 1.75 million shares today. Could be worse. But you've got a lot of major highs going back to April 16th of 2015 at 181 that had 2 million shares. Now, this did bounce with a lot of good news. But seems to me like maybe one more gap out here higher might be the end of it. Give me a call at 877-927-6648. Email me at path@tfnn.com or post a message in the den. Rather quiet, I think, right now. Maybe some action before the end of the day. We'll get some emailers off their mounts.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're going to wrap up here looking at a few more of these stocks in the last few minutes. Then, of course, it's Monday, so Tom O'Brien between 3 and 5 today. We looked at any, we were going up the opposite way. LLL, take a quick look on that. Another one making a new high, but not a lot of volume today. You wanted to see about 910,000 shares, 443,000 shares on level 3. So a big deal out here on that one. Let's see what else we have. Land Airlines, a little pop up, but I don't see much in that one. JD, JCI, see what a JBL. Jabil Circuits, kind of interesting to see it pushing highs out here. Of course, they are a contract manufacturer for other electronic companies. You'd like to see the December 4th high of 2015 that had 2.8 million shares at 25.58 come into play. So we're looking at 2.8 million shares in the last couple of days. Today, 1.466, 2.355 on Friday. The day before that, 1.52. So, iffy is what I have to say. And you a lot of gaps down here, and you could qualify this gap at 19.5 as gap 1, double gap 2 at 22.50, and this gap up here actually happened before. So maybe you get one more gap out here, and then you watch that kind of pull back. I don't see enough juice in that one to be buying it today, as it actually is today breaking that previous high. And it looks like it will on lighter volume unless something else comes out. Got a few other stocks out here. Prairie Dogging. This one's kind of coming back in, and this is Icon PLC. ICLR is the symbol on this one, going through the August 13th, 2015 high at 84.14, 655,000 shares. Just about the same out here. Most of the 270, 370, 225,000, down 180,000 shares today. But again, not a lot of juice out here, making me warm and fuzzy out here. Maybe a couple of companies. I got some emails and wanted me to take a look at Apple. I don't know if there's anything you can say about Apple other than a lot of rumors. And I guess the one that they're pushing out there today to try to hold the market up with Apple by itself is that Apple will have a iris scan reader built into it. Very tough to hear any rumors out here that where anybody's actually seen anything. It may be something they're playing with that gets in another phone, but it doesn't matter. Today, that's what Wall Street is pushing, an iris reader in every phone. How could that go wrong? They'll just steal your eyeball. I've seen those movies. I know how it all ends up. The Cooper Companies, which I think is a tire company, isn't it? Or this is the other one, I think. If I'm not mistaken, if this is the other one, this is the one that owns like Bosch and Lomb, lens cleaner company, all that. Medical device company, manufactured market range contact lenses, spherical lenses, toric and multifocal lenses. Yeah, this is kind of like the Bosch and Lomb contacts and saline solutions and everything else for eyes. Now this one, 190.99, which is the September 20th, 2016 high, 650,000 shares, spiked it with 262,000 shares Friday, down on fairly light volume. Energy was a little lighter on the way back up off the December 1st low out here. So there's going to be probably a ton of stocks tonight, I suspect, that have broken highs on lighter volume by the time we get done. In the meantime, sell when you can, not when you have to. We'll see you here tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.